Hi guys, we're going to start in a minute. Hi, welcome to Traders Talk. And today we are going to have a very exciting topic once again. And for those fans who have been following me, I welcome you. And if sound is okay, just give me a thumbs up and then we will start. And my name is Ming Hon, and I am the host for this Traders Talk, where I will share with you trading tips and updates on stock markets and also financial literacy. Yeah. So for those people who are into trading, or those people who wants to actually learn trading, and to actually get good in their trading skill to actually generate more income. Yeah. So this is the show for you to follow. Yeah. And of course, we have been hosting this for quite some time, and there has been a lot of great topics which I have actually covered, and all those topics would have been included in our Facebook page. Yeah, you can actually go to the past videos, yeah, on Traders Talk, and to actually view all the past series which we have, and for those topics which are very interesting on trading, on financial literacy, yeah, and also on financial literacy, yeah. So great. So today I'm actually going to cover the hot news, which is actually Omicron, yeah. So this Omicron, as you guys know, it is actually another mutated variant of the COVID virus, right? The last one which we have actually heard is Delta, right? Delta, and before that, I don't know what other variants they have. And funny thing is, this time round, right? They tend to use all these Greek Greek names, right, to actually name all these viruses. Yeah, and they choose Omicron. Yeah, and whether it is very tiny, is a micron size or what, I don't know, but they choose Omicron. And one very funny thing, which I noticed from the internet talking about this Omicron, is this is it. They say that this naming, right, is actually just like moronic. Moronic, yeah. So if you actually look at this, let me just put on the chat, uh just some entertainment. Omicron, right? Micron, right? And if you jumble up the words, right, of Omicron, uh it comes to this moronic. You see, Omicron, if you play Scrabbles, right, if you try to actually figure out words, right, so if you jumble up this Omicron, you can also form a word moronic. Yeah. So of course, whether this Omicron virus is actually going to be a big threat to human, to us, to our lifestyle, it is actually still not certain yet. So even the WHO, or even all the scientists and all, are trying to actually figure out what this threat for Omicron be, and how big this threat will be. And of course, some people have came out to make statements to say it is what is that? It is quite bad. The virus won't protect you guys, and of course, all these kind of statements which comes out would have actually a so-called market reaction. I mean, if we are all traders, and if there are also, especially the retailers, right, which would tend to retail players, which will tend to react quicker, because they're scared. I mean, if someone comes and say that all the vaccines in the market, right, will not protect you from this virus, then the market will actually turn down, right? because this is just a fact, you see. I mean, the market is actually something which is very emotional, very emotional. Okay, and it does not react to logic. It is really emotion. And if we as traders, right, know how to actually take care and take opportunity of this kind of emotions, right, that is where we will actually get to have a winning advantage. And this is also one of the topics which I will actually also cover today, right? Whether we should actually ride with all the other people who are reacting to this, or we should just sit back, stay cool, and look at the situation and then come in later, like vouchers, right? Like vouchers to actually take opportunity on the situation. Yeah, because if everybody is actually going for the kill, right? The kill, right? At the end of the day, what will happen is that a lot of fatality. Imagine if you are actually in a jungle and you have three lion, uh, have hunting a deer, and one of the lion have actually already killed this deer or beaten this deer, and this deer fall down lah. Okay, and of course that is actually an opportunity, right? It's food, ma. So all the lions will actually tend to take opportunity. Everybody or all the say 3 lions or 10 lions will actually go to take this deer, right? Because they want to eat it. So when it goes and eat this deer, only one deer, my poor deer, and 10 lions come and eat it. Then of course, if it is not enough, right, what will happen? All the lions will start to fight, right? The lions will start to fight, then they will have casualty. Yeah. So of course, this is the kind of situation where we can actually get into the market, like the current situation where everybody is actually going for the kill. Yeah, going for the kill. And of course, what is the kill? I mean, the kill are the teams. I mean, basically, when the situation like this comes, what are the teams? The teams are vaccine companies are tend to go up. Yeah, all the medical company related to COVID are tend to go up. COVID stocks, what is that? Stay home stocks will be more popular. People will start to actually go and buy companies like Zoom and all these kind of things. Yeah, it will tend to go up. Yeah, and then what are the stocks which will actually come down? Yeah, I mean stocks which are sensitive to COVID, like for example, hotels will come down, airlines will come down, and what else? Theme parks would actually come down. Yeah, so this was actually the first reaction when the news came out. Uh, on Friday. On Friday itself, it was the worst lah. Yeah, so everybody was buying all these hot stocks up, and then all the hotels and all this were actually coming down on Friday. Then of course, what happened yesterday was things were a bit cooler. The were some recovery on the hotel stocks. The what is that? The vaccine stocks and all was still actually going up. Yeah, yeah. So the situation is just like this, and of course, for us, I would prefer to be like vouchers lah. Yeah, let the tiger or lion finish up fighting each other. Yeah, and then as vouchers we come in for the so-called second wave, which is how to say, safer lah. For me it's safer because I don't want to have a situation where sometimes suddenly somebody came out and say all the vaccines will protect the moronic of sorts. Omicron virus. Yeah, and it is actually not to fear this virus. Yeah, I mean, if you hear this news, right, straight away the market will react positively. Everything will turn the other way very quickly. And of course, this also happened early in the morning today, right? The U.S. president said that we are not going to lock down their country and all. And of course, the ES mini futures actually went up in the morning. Yeah. Then another guy, I think it was the CEO or something of Moderna, came out and said that the current virus is not going to protect, not that effective against this this virus. Yeah, and of course, after that statement was made, right? The market came down. Yeah, and now if you look at the ES mini futures, right? Let me see. ES mini futures is down 42 points. In the morning, it was actually up 30 to 40 points. So now it was actually the other way around. Yeah. So as you see, right, the situation is actually a bit volatile. So for those guys, for us, I mean, we do not know whether it will go up or go down. Of course, the obvious would be like what I said, all the vaccines would tend to go up, and then the COVID sensitive stocks like hotel and all would tend to go down, but not necessarily if you enter at just the wrong time when a statement is actually made, right? Then of course you will be caught. You will be caught. So we actually want to get out of these situations. Yeah, just like Moderna yesterday, right? For those who thinks that Moderna will actually go up by I don't know 30 or 60 points, Moderna, right? Let me just put Moderna up. Yeah. Okay, Moderna. Let's make this bigger. mRNA, right? Okay, if you look at Moderna, right? Yesterday, what happened was it kept up, right? You see, it kept up about here. Let me see. Let me make this bigger. Oops. Okay. Okay. Moderna actually gap up yesterday. Let's see how much they gap up. Uh, okay, it actually, if from here, right? Yeah, you see it gap up 48 points. Yeah, it gap up that means earlier it was actually here, right? The day before it actually closed here, right? Yeah. So when it opened, right? I mean, you can see here, high was 376.65. 376 was almost the top here, lah. Yeah, it was almost the top here. Yeah. So Moderna actually gap up yesterday. So imagine if you were actually following it, let's put the 5 minutes chart. Oops. Okay. Let's make it. Okay. Here. Yeah. Is this the one? This is 26. This is 26, 26, 8. No, no, no. No, don't take 5 minutes. 30 minutes. Yeah, okay. This is the one. Okay. So if you see, yes, yesterday it was actually close here, right? Let's see. This is 26, 26, 26, 26. Yeah. So Moderna actually closed at this level here, and then it gap up. It gap up. Okay. So for those people who saw this and thought that this was an opportunity that it will continue to go up, right? They might have actually entered into this trade, right? Bullish trade, bullish trade. Yeah. Straight away, market open. Within the first 5 minutes, they actually got in. This 29. Okay, yeah, they actually got in. Yeah. So of course when they got in, the market actually sizzled. The thing actually sizzled down. Is it sizzled down? And from this price here of up by $48, right? $48. It actually came down very sharp. Within the first 10 minutes, it came down. Imagine if you were to chase these stocks, you chase these stocks and you entered, and then when it came down, you tend to panic, depending on what type of trades you do. If you straight away buy on the shares, then that's actually a direct impact. if you have actually just bought a call, it will be very painful also, because if you bought a call at a high, and then it dropped down in the next few minutes, yeah, then of course the call value actually go down very drastically. And because the IV, the implied volatility of the stocks is actually so high, right? Then you would also it would also be very expensive for you to actually buy the call. And when the market drops down, you will actually lose a lot of money. Yeah. And actually the market close. Let's put this back to daily. And then the price actually closed at 368. Yeah. So 368 means that it has only, no, the price, yeah, 368 means that it has actually gone up by about $40. $40, yeah, $40. And during the intraday, you can actually see that it has actually gone down to as low as $22. Means half of the day end price lah. Yeah. So imagine if when it has actually gone down to $20 by how much? Here to here, imagine if you were at the top and then it will to go down by 20 over dollars, right? If you have actually done a call at the high, you would have actually panicked to see that, oh, probably your trade is wrong. It will actually go down, and you would probably sell when you saw you're making actually a huge loss. You drop off the trade here. Yeah. So when that happens, then after that the price actually goes back up again. It will be a very tense situation or volatile situation for you lah, because you see your P&L going up down up down up down. Yeah. So today I'm going to share with you how to actually trade this kind of situation, and to avoid this kind of whiplash by chasing this kind of stocks, just like any other people like. Yeah. So far you get what I'm saying, right? I mean, if you get what I'm saying, give me a thumbs up so I know that you guys are actually following. Yeah. So for those who have friends who are actually also trading, right? Yeah, just shoot them this link for the current trader stock, so that they can also get in when we actually speak about the strategy and how to actually trade this kind of situation, so that we will actually get less risk. Yeah, less risk. Okay, this is the S&P. I mean, S&P yesterday you saw it is actually upright, yeah. And of course today I think it's actually going to be red again, going to be red again. And it's funny thing is, as I said, the market sentiment can actually change very fast. It can actually change very fast. On Friday it was a very bad, I would say. Okay, it's the bad lah. I mean, very rare you can see a 2% downtrend in a single day, right, nowadays lah. Yeah. And of course, especially Friday was half day trading, right, because of the post Thanksgiving holiday. That would be quite a stressful day, lah. I mean, for traders who have many positions to actually uh, manage, or to actually cut if they need to cut, if they need to adjust their option trades, they will need to adjust. Yeah. And of course, come Monday, after they have actually done the adjustments and all, thinking that the market will actually go down, right? Yeah. Then of course, market went up on Monday. Yeah, on Monday. But overall, I would say that based on the real moves, I mean, technically it is a bit neutral yesterday lah. Not too bad. Not showing a lot of a big green in the positions. Neither is actually showing a lot of big reds as compared to Friday. There was actually a lot of big reds lah. So again, trading strategies which you have, well, I mean, depending if what type of strategies we should have. Some strategies tend to be very direct to the to the what is that, to the market. I mean, if you are having a lot of calls, right, then of course that you will be very hard hit when the equity market goes in a big rate. Yeah. And of course, if you have a bit of so-called neutral positions, right, then of course at one side you will gain, at the other side you will lose, and at the end maybe you will still be at a loss because of the change in volatility, right? Then on Monday, when the volatility actually reduces, the VIX and all came down, right? Then of course you may recover from some of the negative positions. But if you're just doing single calls, then of course the improvement might not be immediate on the next day, because market is still uncertain. Yeah, a lot of stocks are still not moving back to the highs of the pre-Friday prices. Yeah, and of course Nasdaq itself, it is red yesterday. Yeah, I mean not a lot, by I think about 100 over points. 100 over points. Some stocks actually went up, like in Facebook, Apple, and all these rallied up. Amazon went up, and then what else? Yeah, I mean Google also went up. Yeah, so some of the big cap stocks had some recovery, because people see green, right? Then they will jump in to take the opportunity to buy on dips. I didn't do any trades yesterday lah. Yeah, apart from selling some puts. Uh, I did not enter into any particular major trades because I want to actually come in as a voucher, right? To actually trade the after event. Yeah, after event. Okay, so again, look at this chart, right? I mean, this chart, I want to also put a point that if you look at this chart here, there is this place here which is around 16 or 17 of July. This was the time when the Delta thing actually came out strong. Delta, yeah, Delta virus, and the market actually went down, only for a day lah. I mean, only for a day. The reaction was not like now, yeah, because they are saying that this virus has mutation. Delta has 10 mutations. They say this virus has 30 or 32 mutations. So it's like 3 times more potent than the Delta. And when the Delta came, yeah, so this was the so-called one-day knee-jerk reaction. So when there is actually a 30 mutations virus out, right, and people do not know about this protection of our vaccines against this virus, so the market would probably react a bit more, yeah, a bit more, and cause more uncertainty. So I would say this would linger for a while, few days, until WHO comes out to make some form of statement to say whether we are clear or we are not clear. Yeah. So when that comes out, whatever the situation is, the market will again react. Market will again react. Yeah. But at the end of the day, the reaction will lapse. And we are going to actually trade this so-called lapse of reaction, because the lapse of reaction is more certain, correct or not? Same like when the COVID-19 came in March last year, right? March last year, there was actually a reaction. Yeah. So the reaction was down. Immediate reaction was actually down. Yeah. But of course, post-reaction is that things will start to normalize. Okay. So for those people who have actually traded post-reaction would have benefited a lot. Yeah. But for those people who traded the reaction, you do not know whether you are going to win or lose, depending on when you go in. Yeah, if you were actually just buying puts when the reaction came down, right? Imagine if you have not uplifted your puts when the market turned. You would have made a lot of money, then immediately you will have saw a lot of money gone. Yeah, yeah. So that is actually the kind of situation. The same thing which we actually want to do this round. And of course, we look back at a bit history, right? Uh, when this Delta thing came, what was the post reaction and how did this kind of stocks react? Yeah, and we want to actually see similar kind of patterns coming through this round and try to actually earmark and put that in our so-called what is that alerts that if this situation comes, then we actually start to trade it that way. Okay, so this is what I'm saying. Omicron, we don't know whether the stocks will actually go up or the stocks will actually go down. So what to actually look out for? Yeah, so this is what I actually want to cover. Okay. Okay, so the winners, right? I mean, of course, like I said earlier, who are the immediate winners when this Omicron comes out? Yeah. So the immediate winners would be, of course, the vaccine companies. Yeah, because they make more money. Yeah, yeah, they make more money. So of course, they can make more money because if let's say for example, the market expects that the past vaccines would not protect us from this Omicron, then of course your booster jab will also be useless. You will need to have a so-called totally new jab, yeah, new jab. So if you look me today, I also wear Superman. I need protection. Everybody needs protection. Yeah. So when they need protection, of course, the immediate winners would be the all these vaccine stocks like Pfizer, Moderna, BioNTech, and Johnson and Johnson. Of all these stocks, right? I think the immediate reaction would have actually taken place on Pfizer, Moderna, BioNTech, Johnson and Johnson. A bit lagging lah. Usual lah. Johnson and Johnson is always a bit a bit lagging, right? Because of course their business is not only related to all these vaccines. They have also the consumer business, which is actually a big part of Johnson and Johnson, the vaccine makers. I mean, other vaccine players. I mean, I'm not talking about it now. Yeah. So these are the immediate winners. Yeah. And of course, a lot of people, like I said, would actually chase these winners. Chase these winners. Okay, and of course, who are the losers? So these are some of the examples of the losers. Of course, airline company is one. Theme park is another one, which you can see all the reaction already on Delta Airlines, Southwest, South is Southwest or something. LUV, I think LUV, the ticker LUV. Yeah. And then Disney theme parks, Hilton, Marriott, yeah, of which I think Marriott was actually a big hit, lah. Yeah, but both Hilton and Marriott has actually had a bit of recovery, lah. Yesterday Hilton was up about $2. Marriott, I'm not sure, but I believe it was also up, lah. Yeah. Delta and Disney probably not moving much. Disney is still going down. Never recovered since his earnings the last round. Yeah. So these are the immediate losers, and of course, again, a lot of people would probably be shorting these stocks or buying puts on these stocks. Yeah, to have an immediate effect on their situation. Yeah, but as I said, when this thing turns, it will turn very fast. Yeah, if you have profits in, right, I mean, it can actually turn into a loss or reduce your profits very quickly. Yeah, because the market, I mean, when it change immediate. Yeah, it won't wait for you to sell your position lah. Because when all the news comes, right, is before market all the news will come. Yeah, so before market news will come, so before you had the opportunity to actually adjust to your trades, adjust to your stocks, right, the price would have already moved. Yeah, so you do not have opportunities to actually what is that react fast enough to actually take make change or exit your positions. If you were in profit, you would probably profit less or even go to a loss. Yeah. So that's why I said it's a bit risky to actually trade. Yeah, it's very lucrative for sure. Yeah, if you can win a lot. But of course, because of the uncertainty, you can also lose in the trades. So that's why I say I would not prefer to chase this kind of winners or losers. You see, I would not want to chase. Yeah, if you actually want to do this kind of trades, if you still believe that there are opportunities, do quick ones. Do quick ones. I mean, if you do options, if you do so-called debit spreads, right? Debit spreads, bull call spreads. Just enter and exit, enter and exit. Yeah, and that would actually be safe and quick for you. Yeah, I mean, if it continues to go up, just exit. I mean, exit at 30, 40, 50% profits, and just get out. And if you want to do the trade again, go in again and do it. Yeah, don't hold a long term trade. Yeah, don't hold a long term trade. Okay, so I will go on to cover some of these stocks, right? Let me just put this up. Okay, make this smaller. Okay, Pfizer. So the first stock which I actually want to cover is Pfizer. Okay, you can see Pfizer, right? So I'm just going to give you a bit of perspective of the history and then how the stock actually reacted based on the history pattern and what do we actually look out for? Yeah, look out for. Is that good? Yeah. If it is okay, give me a thumbs up. Then I will actually start here. Any one of you have actually gone into Pfizer? Gone in, gone in already. I I don't have positions as I said on any of this, any of this. Okay, great. Okay, so if you look at this Pfizer, right? Let me put perspective. July. Just now I was actually saying the what is that? COVID, right? Delta. Sorry, Delta. Delta came in on 15, 16. I think, no, sorry, it's not here. It's here. It's here actually. I think 16th of July. I mean, I've just searched the internet lah. I mean, uh, I saw it coming in around 15, 16, around here lah. Yeah, around here. Not this, not this, not this. It came in around 15, 16 July, right? 15, 16 July. And you can also see it on SPX, right? I think it was July. Yeah, here. I think it's here. It was here. Yeah, it was somewhere here. Yeah. So we are somewhere here. 15, 16 July, the Delta thing, so-called burst lah, the Delta. So of course, when Delta burst, right, what happened was that the prices for Pfizer started to go up. Normal reaction, just like now, Omicron came in, Pfizer started to go up. So when was Omicron? It was here 24th, right? So it started somewhere around 24th here, right? So you see that Pfizer is going up, right? Going up, right? Yesterday also, you see yesterday again, overreaction, gap up, then at the end went down. You see, yeah. So this is the thing which we want to avoid, Yeah. So it's the thing we'll do. So Pfizer actually going up all the way up, okay, and then things fizzle. As I said, lion eat deer, finish eating deer, fight each other, everybody die. Things fizzle. The carcass will still be there. So who comes next? Vultures, right? So vultures will come. So for sure, the vultures have food. I mean, even if it is bone or some leftover or whatever, it will make the voucher full because it is actually with certainty the body will still be there. Vouchers can come and eat and finish up whatever leftovers. So we would want to be the vouchers. We don't want to actually come to these uncertain things, right? Yeah, because we don't know at which point you come in. For example, if you come in this one, then suddenly you buy at the top here, then next day you see it drop. Scared or not? Scared, right? Or you buy in here, at the high here, and then suddenly you see it drop. Scared or not? Yeah. Okay. Or you buy in here, yeah, and then suddenly you see it drop here. Scared or not? Scared, right? Okay, so how to actually avoid this kind of situation and to get more certainty is to actually leave for the whole thing to fizzle. And when things fizzle, right, it always leave some clues, and we can actually see these clues with the chart patterns. Okay, so of course one of the more common chart patterns which we see is actually a double top. And if you look at this here, right, of course, this is actually uh, what we call a double top also. Although it did not form so perfect that the top is actually touching the height of this, right? Yeah, that means this is actually the height, right? Yeah, it does not touch the height. But you can also see that at the end of the day, on so-called the here, right, the next patterns which comes, it is also something this kind of shape. It goes up, it comes down, it goes up, it comes down. Yeah. So it's actually this kind of things which we also call it so-called double top lah. Yeah. And when the double top forms, right, very likely before the double top shows, you would have very distinct what we call flush up bars lah. What this is like you would have a very abnormal, very long big bars. You see before that the bars were actually very small, very small, very small, very small. Yeah. And suddenly you see the last, when it is stoppish when it is stoppish, that a sign of it coming down, you can actually see very long bars. Yeah. And especially if you see bars which actually goes up very high and have a very long tail, long tail, long tail, long tail. Yeah. So these are what we call also signs of top. And when it forms to have certainty, most of the time it will have a double top. Okay, why double top? Of course, it is to trap people. Yeah, it is to trap people. It goes up a lot. Yeah, more people will chase, ma. Hey, come on! You see suddenly, so bullish, bullish or not? If you see this one lah, if you see this thing here, bullish or not? Bullish, right? This thing here, so long, and when you were during the day, intraday, on this particular day, right? On this particular day, this candle here, it went up so high. Wait, yesterday you don't want to buy, today you don't want to buy, correct or not? So for those people who want to chase on the basis they are FOMO, right? Hey, here don't want to buy, here don't want to buy, here don't want to buy. Wow, go up so much, don't want to buy. Go up more, don't want to buy. Correct? Once you buy, then you are trapped. Okay, so once you buy, you are trapped. Then you have actually gone into a trap. Okay, do you know the trap? So what is this trap? Okay, so of course once this thing forms, right, you can see this is again a sign of sign of top. The price will actually tend to come down. Okay, and to comfort those guys who have actually went in, to say, okay, it is not the end, we are having a comeback. It goes up again, right? We are having a comeback. Okay, but of course this comeback is again to trap you again lah. Okay, and for those people who have not entered, this is actually the second round where the market makers would actually trap people to think that the price is actually going to do a higher high, to do a higher high. Yeah, but before they actually do a higher high, right, they would actually come down. Yeah, so these are the signs. Yeah, long bars, and signs where you can see a bar with a long tail. Yeah, so once this emerge, right, if you are in any trades, um, please take profits lah, take profits, even though when it comes down, you if you have made profits, it's time for you to take profits. If you are still bullish about it, size down, you can size down. Yeah, in case it is doing a higher high, right? Yeah, you can still have some positions to continue the higher high. Otherwise, you would have actually made some profits and exited. Yeah, go and do new trades. Yeah, there are many opportunities. Yeah, don't hold on just to one. Okay, so this is one. Yeah, long distinct bars, double top positions. Okay, and the indicators which we can also see is actually, of course, the stochastic, when it actually goes so long and so high, right? You can actually see that the stochastic is tend to actually be also on the high side. What's my pen brush not working? Okay, yeah, stochastic will tend to be above 80, above 80 stochastic. Yeah. Okay, you guys are okay, right? Can see my charts. Yeah, okay, good. Yeah. So okay, so stochastic will tend to be high above 80, and of course, when stochastic goes down, start to actually go down below 80, again, that is actually a sign of top, a sign of top, or a reversal pattern, what we call a reversal pattern. So you see here starts to go down below 80. Yeah, and you start to see the prices start to come down. Yeah, okay. Yeah, if you have not exited, if you have entered here, not exited here, make less profits, you can also see this as a sign of exit before the price comes down. Okay, this is one indicator. Then of course, the second one is you look at RSI. Okay, how do we look at RSI? RSI is relative strength index lah. Okay, so relative strength index, how we actually look at this is actually to see that the RSI is starts to slope down. So of course, when RSI starts to slope down, right, it is again an indication of weakness in the price. Price tends to actually go down. Yeah, so that is actually the second thing which you can actually see this. Yeah. And of course, the next indicator which you can actually use to look at this, right, is MACD. Okay, so and on MACD, right, of course, the general thing which we actually see in MACD is that, of course, when MACD is green, right, means price is going up lah. Yeah, price is actually going up. And of course, the longer the, what is that? The longer the what is that? The bar, the bigger so-called momentum, the moving average is actually getting the gap is bigger lah. Yeah, so it's actually going up, right? So price goes up. Yeah, of course, when the price starts to actually change, right, that means the so-called price trend starts to actually change. The MACD would also starts to change, to also chance to change from green to red. Of course, if you see here, right, okay, it was actually very high here, and when it actually formed this bearish long bar with a very long candle after the flush up, right, and the, yeah, and after the double top showing here, right, you can see that the MACD starts to turn red. Yeah, and starts to turn red. Of course, when it starts to turn red, means that the price is actually coming down. Yeah, coming down. Yeah, so these are the so-called indicators where you actually starts to identify the change in trend, and we want to actually trade this change in trend. I mean, we are not going on the first trend here going up because of the uncertainty. We want to trade the change in trend. The vouchers come in to trade the change in trend. So we are the vouchers. Okay. So look for these kind of patterns, and when that happens, you start to actually take the different position uh, of the prices actually going down. And how what type of trades you want to do? If you want to be safe, yeah, if you want to be safe, do what is that called? Bear call spreads. You can do spreads. Yeah, you can actually do spreads. Bear call spreads. You can actually also see if they are what is that history high. Yeah, for Pfizer don't have like, I mean, long time is so high, so there's no history of the high to actually see. You can just base it that this is actually a sign of top to trade bear call spreads. Yeah, because price goes down, your bear call spread would actually oops profit in time. Yeah. And of course, if you are you want to trade a directional trade, then you can actually do what is that called? A put spread, Put spread is actually a cheap way for you to actually trade on trends, trade on trends. Yeah. You guys know how to actually do put spreads, right? That means you buy a put, and then you buy a lower price put. Sorry, yeah, you buy a put and you sell a lower price put. Yeah, on the basis what is the target price that you would expect this so-called Pfizer to actually go down. I mean, you can actually use so-called judge the length. I mean, from the length of it to go up to this length, it takes maybe here is July, here is actually August, right? So 1 month, right? 1 month. Then of course, if you actually want to do bull spreads to maximize your profits, you actually target to put the maturity date to the date where you expect the price to go. I mean, these are some estimation you can actually just do, and if you can catch the full one, that means from let's say you start here $50, right? Yeah, you buy a put at 50, you can actually sell a put at 41. Yeah, so you actually get $9 difference, right? You can actually how to say write the full $9 in a month. If it goes to 41, then of course your profit would be going to max on that time. But of course, if you do it 50 and say 45, then your profit is going to cap when the price is going to say 45, right? Yeah, it's still okay. You still get $5 difference less the cost of the trade which you actually enter. So that's another trade which you can actually do to trade the so-called expected downtrend of these stocks lah. Yeah. So these are the uh, indicators that to actually trade the trend reversal, which is actually more probable from what you actually see here. Okay, so this is actually on Pfizer. Yep, so far good, so far great. You guys understand? If you understand, give me a love so that I know you guys are on track, and I can actually go to show you more examples. How many of you want to actually see more examples? You want to see more examples? Share this to your friend. So I can see more people coming in, then I would actually share more examples. Yeah, so we still have a 10 minutes. I can go a few more examples to actually show you. Okay, so this is one Pfizer, and again you we look at another one. This is actually on what is this? Did it change slides? Okay, change. Yeah. Okay, so this is actually on uh, BioNTech. Yeah, so the other vaccine, right? BioNTech. Similar chart trend. Yeah. July is here, right? So July is here. Delta came in, price went up. Yeah, price went up. Then when it was actually toppish, you start to see distinct very long bars, very long bars. This all these bars are actually all longer. You can see all these are very small bars. Yeah, very small bars. These are very long, distinct bars. Then, of course, when the price started to change, it is again very long bars up and down because of the price going. How to say? The price daily price difference is actually very high. it goes up a lot, it comes down, it goes up, it comes down. Yeah. So this is again the last efforts by the market makers to trap to trap people who are FOMO about all this. Okay. So again, this one is actually just no real double top lah. I mean, it is just a very long distinct bars, and you can actually see that it is here. Okay. The other thing which you can also do and check, right, is to also look at if the price is actually formed at high. That means what I mean is that when the price is here, right? Okay, so of course at this point in time, this is actually the high of the stock price. Okay, so this is actually a high, right? Yeah. Okay, so that means the stock high, whether it is 52 months high or whatever, it's a high, all-time high. Okay, when it's actually at all-time high, we call it ATH lah. Okay, so when it's actually at all-time high, when it reaches all-time high, and the next bar after you see from the all-time high is actually again a distinct bar, which is very bearish, distinct, very bearish. Okay, this is the sign which you actually need to see. Probably, let's say for example, maybe say here, because the all-time high continue to go high, right? Okay, how do you actually identify? Okay, maybe here you see that probably this price was all-time high. This price here was an all-time high before this emerged, right? Okay, then this one, I mean, basically it is like a doji, so it can also be a very bullish thing. So it's not a so-called distinct bearish bar. Okay, correct. So I don't consider that as a signal. Again, the second one here, yeah, again, this looks something still a bit like a bullish red bar, bullish bar, yeah, long tail, and then the body was still above the second part, second upper part of the candle, yeah, so still okay. The third one, long distinct bar, yeah, all-time high. This is actually the all-time high here, right? And then post all-time high comes with a very bearish bar, very distinct bearish bar. Okay, if you don't believe in the first day, you think that got reversal, got chance of more doing a higher high, you don't believe it. The second day, it show you another chance. Another chance for you to exit the second day, for you to actually take the profits. That means from here to here, for you to take the profits. That means take profit lah. Because it come down here already, man. You don't believe, right? Second day come already, you don't want to go out. Yeah. So again, this is the signs lah. Again, of course, the other ones is the stochastic again coming down, RSI sloping down, start to actually slope down, and then the MACD starts to actually turn red. Yeah, so turn red. Yeah, red. So this again, the next one which I pointed out today is ATH, and plus next day bearish, very big bearish. Yeah, so very big bearish bar. Again, another point for you to actually catch the so-called sign of top and a reversal. Yeah, then we trade a reversal. So like I said, the things which you actually trade depends. If you did post here a bear call spread, right, you would have actually profited from that bear call spread, even though after that it actually moves sideways. It actually moves sideways. Yeah. So again, types of strategy. If you do the safe one, like a bear call spread can be a safe one. It's already at all-time high. You would not expect it to continue to go up. All the signs of reversal has shown. Do a safe one, which you can have further margin up. Even if it continue to go up, right? Yeah, you already, when you do a bear call spread, you would have another safety margin of 10% at least. Even if it continues to go up, you can still be safe. It don't go up maybe about another 10% up. Yeah. So this is BioNTech, mRNA. Again, similar situations. It goes up here all-time high, and then very distinct bearish bar after the all-time high 1 2. Then after that, it starts to go sideways. Yeah, that means the so-called uptrend has been broken. We won't go up further. Of course, without any new news or what, it won't move already. That means on the past reason why it has actually shot up, right, which was Delta, right? That reason has already diminished. That means all the deer are already finished eaten by the lion. You cannot go up anymore. Yeah, the vultures to come and take the skeleton or what. Yeah, then it decides to go sideways, and if no further news, it will continue to actually drop. It will actually continue to drop. Yeah. So again, the same situation for the stocks right now is going back to the same thing when the Delta came, or Omicron, not moronic. Okay, so Omicron come, yeah, everybody starts to rush in, yeah, and when post here, signs of tops comes, yeah, uh, signals, RSI coming down, stock, this MACD turn red, yeah, then it is actually already same situation here, yeah. So we post it later. We trade later. We don't trade now, so that later you have more certainty. But put it on your watch list. Continue to actually monitor this. Continue to monitor the situation on the Omicron. Omicron. I always think I want to say moronic virus. Yeah, because really it is actually a very moronic virus, because after Delta, then Omicron and all, is a very a bad situation for everybody. Yeah, and when we think that things are going to normalize and things are not normalizing, our life is very depressing. Yeah, so those these kind of things will uplift us lah. I mean, if we cannot have a normal life, right? At least we can generate some income from the stock market to balance back our so-called social life. It's okay, right? It's okay, right? Yeah. Do you agree? Do you guys agree? Okay, so this is mRNA, and the next one is actually Johnson and Johnson. July was here, right? Okay, I changed to Johnson. Yeah. So July was here. Delta came, price went up. Yeah. Signs of top. This is like a small double top now. Got double top now. Let's check. Okay, double top. Yeah, see here, price up here, went down, go up, come down. Yeah, come down, but it didn't go. It didn't. Yeah, it did a double top. Yeah, it was here. Yeah, this line. Yeah, so double top, right? Double top lah. Yeah, this is double top. Yeah, so double top. Then long distinct candles. This is Johnson and Johnson price don't move much one lah. Their long distinct candle is also not that long. You see, not long here, right? But here it starts to get longer. Yeah. Okay. So again, double top, signs of top is here. Yeah. This coming down. RSI sloping. This is changing to red. Yeah. The MACD is actually a very quick indicator lah. And as and when you see that the MACD turns from a green, that means it is actually above. It switched to red. Then you start to monitor. Yeah. You see, here is MACD turn red here, right? It was already somewhere here, ma. Yeah. Then you start to monitor. Here is already one sign, ma. If you don't believe, you wait for it to turn red to have a so-called confirmation. Then look at the stochastic, that it has to actually go down below 80. Look for the RSI to actually turn sloping down, because it is very sharp. You see, it's actually very sharp down. Yeah, and coming down from below. This was what, 870. I think this indicator is 70 lah. It doesn't matter lah. I mean, at the end of the day, if you look at it coming down sloping, right, from the so-called toppish line which you set here, yeah, then it is actually a sign of trend reversal. Yeah. Yeah, so Wyman agree, right? So pathetic life which we have. Okay, so that is actually Moderna. So that is actually the fourth stock which we covered. All the four so-called vaccine stocks have this kind of similar pattern. You can actually look at other stocks if they are the stocks which you trade, right? Those stocks which are in your so-called watch list, right? Go and check out their charts, right? You can actually just go to tradingview.com. This is actually a free software, right? Tradingview.com, and you can actually just plot all these things here. Yeah, stochastic, RSI, MACD. Yeah, just go to indicators. Yeah, indicators, and type stochastic, yeah, stochastic, or RSI, related strength index. Yeah, and then MACD, yeah, MACD, yeah, and then you just add the indicators. You can have all these indicators here. Yeah, great. Okay, so we are finished with the vaccine stocks. We just spend a short one, just look at whether they have a bit more correlation on the so-called travel and the hotel stocks. Okay, if you look at travel and hotel stocks, I would say that the trend is actually a bit choppy, and why I say so choppy, right? Again, same time frame, uh, July, 16th of July, Delta came. Right? Delta came immediately on this one big reaction. One day, yeah, went down. The next day itself it goes up. Already. Yeah. So this is actually a so-called overreaction. Straight away, come up, come down. Then the next day it actually go down. Then after that, it starts to trade sideways. When the situation actually so-called sizzle down, it starts to actually go back, slowly go back up. That means breaching the sideways pattern. Okay, sideways pattern. And again here, I think this was basically the market was down. It came down, and then of course things start to come down again. The Omicron came again, gap down, and yesterday it was actually slightly up. Yeah, today probably would go down. Yeah, pre-market already 35.62. So again for hotel stocks, no, sorry, this is actually Dow airline. A bit choppy, and same if you go to Disney, right? So this is the second one, Disney. 16th of July. July is somewhere here. Yeah. So again, 16th of July, one big reaction here, drop down. Then after that, sideways. Here, go up again. Yeah. Same like the Delta Airlines. The trend for this on the travel side, I see is actually more or less the same. Yeah. Huge drop on the day the news came, goes sideways, goes up. Then after that, it actually starts to go sideways. Yeah, sideways within a price band, within a price band, So this is actually the price band. Yeah, this is actually a price band. So for this type of stocks, right? I mean, if you can actually enter so-called neutral trades, if you can actually get decent premiums on this, it is actually okay. That means basically you do trades like iron condor. That means if you can get strikes below the below the low points it has hit, and above the high points. Yeah, above the high points, then you would probably benefit from the sideways trade. But of course, for Disney, here is actually the earnings which came and then it dropped down. So of course, for this type of trades, please exit the trade before earnings. to actually avoid situations like this. Yeah. So of course, if you traded this, depending, let's say you come in on 16th of July, right? So basically, if you do so-called iron condors, you would actually do it for 45 days, I would say. Yeah, 30 to 45 days. So 15th of July, then you go to 45 days would be August, right? August, end of August. It's actually the maturity, right? End of August. So if you actually went to end of August, 26th of August, yeah, the trade just probably, yeah, you would be profitable. You would be 100% profitable if you were to take your strikes above these lines. Below, that means above this trend line, you would be 100% profitable on the iron condor. Yeah, as long as the strikes is above the trend lines, above this trend line, yeah, this band, you would be 100% profitable. Of course, if you trade, continue to enter a trade later, right? If you enter a trade later, of course, you would actually make a loss because it has actually moved above the upper trend line. The resistance has been broken, and you would loss on the call side, on the call side of the iron condor. Yeah. So this is actually Disney. Okay, and then the other one is actually Booking lah. Okay, Booking is actually a very volatile stocks lah. I mean, the last round I have actually traded Booking.com, right? I mean, I have actually done what is that? A bear call spread. I mean, I think I've done a bear call spread somewhere around here, somewhere around October, October here. Yeah. So of course I was holding it, and then I think no, I somewhere October. Yeah. Then of course it shot up right after the Delta things sizzled down. It the price shot up all the way here, and of course I was actually taking a loss lah, full probably not full loss. I mean, I was actually taking a loss, cut loss on the position. After you cut loss on the position, it starts to come down and below your strike. Yeah, because I think at time it was actually expiring. I think it was the 19 November lah. It was coming down, but not to the uh, close to the strike lah, still above. But I didn't want to take the chance that one day things were okay, went up, back up, I cut it lah. So Booking.com is a bit difficult to trade lah. The spreads are also a bit wide lah. Yeah. So Booking.com, I would not trade spreads on it. Yeah. I mean, not so good experience over the past few trades. So again, same situation. Where is it? July, right? July here, right? 16. 16, yeah. 16 July price went down. After that, it went sideways. Yeah. Then after that, things what is that? Sizzled down. It started to go. It started to go up. Yeah. So this trend is totally different from the other one, right? Because the vaccines, when things sizzle down, it went up. On the hotel stocks, when things sizzle down, it actually go up. Yeah. So of course, if you also want to trade the same patterns with earlier, you can also do that. But of course, the sideway here, it is the trend for them to trade sideways lah. But post that, it went up again. Signs which you see, where is it? Here, yeah. So again, stochastic need to go up from the oversold position. RSI sloping up, and then MACD turning green. MACD turning green. Yeah. So it's the other way when you trade the hotel stocks. The other way you trade the hotel stocks. Okay. This is what Hilton Hotel, right? Hilton Hotel. Again, 16 July was somewhere here. Yeah. Okay, somewhere here. 16 July, Delta came. One day price drop. Subsequent, it went up. So hotel stocks, be a bit careful. Not necessary that it will continue to go down. It is to me, it's less it's a bit choppy lah. Like I said, hotel stocks, it can actually go the other way one. Yeah. So after that it went up. Then of course after that it went here. So to me it's sideways lah. Again sideways. And when the thing fizzled, it went up. Okay, and let's look at the signs. Yeah. Again, when the trend so-called change, right? When the overall trends change, the stochastic again coming below 80 here, I think below 80. Yeah. RSI sloping up. MACD turning green. Yeah. Yeah, but again, very choppy. Right? Of course, overall you can see an uptrend, but in between you can see that there are rates here. Yeah, there are rates in the stochastic. Small one, 1 day, 2 day, 1 day, 2 day, 1 day, 2 day. Yeah. So again, the price movements for the hotel stocks is a bit choppy, very choppy. You see, choppy one, very choppy one. Yeah. Whereas for the vaccine stocks, it is actually more subtle going up. Yeah. Besides Moderna actually, because probably the price is $400 over dollars, right? So the intra movements can be big. Yeah. But stocks like for Pfizer, Pfizer is the smallest movement, gradual increase lah. Yeah, gradual increase. Wow, we are over time already. So interesting topic talking about lions and what is that, vouchers. Do you agree? Okay, no more already, right? Hilton is the last one. Okay, so great. So how many of you have actually let me show my face. Yeah. So how many of you have actually learned something today? If you have actually taken or learned something valuable, give me a thumbs up so that I know that you have actually benefited from this traders talk to actually look at historical price trends, try to actually see what has actually happened in the past. Don't FOMO in on the counter just because of the news that is actually coming in. Yeah. To have a safer and more predictable trade pattern, right? Yeah. Trade the post event and look for all the indicators which I have actually yeah, which I actually saw. Which I actually told you. Yeah, look for the size of top. Of course, the double top pattern is one. The long distinct flush up bar is another one. Yeah, and then the all time high. Uh, Subsequent to the all-time high is actually a very distinct bearish long candle. These are the signs of top that the reversal will actually come. And to support this so-called technical pattern on the chart, right? Use indicators. Stochastic is one. Second one is actually look at RSI. Yeah, stochastic, that means it is actually coming down from the overbought position to coming down below 80. RSI, look at the RSI to start to come down from the top to start to slope down RSI. And then the third indicator we should use is actually MACD. Look for the change in the MACD from green to red to red. Okay. And the other thing is, I forgot to tell, when do you exit this so-called reversal pattern? When do you exit this reversal pattern? You exit this reversal pattern when you actually see the MACD starting to slope down. This is the last one I forgot to actually mention. I thought you when to enter, right? I forgot to tell you when to exit. Okay, when to exit. Let's look at Pfizer. Okay, when to exit. This is when you exit. Okay, You can see this indicator, right? So just the last minute lah. Last minute, I show you. Okay. Okay. You see the MACD. When you see the MACD becoming smaller, okay. When you see the MACD, you see this MACD is very long, right? You see the MACD, right? Okay, yeah. Okay, so this MACD is very long. The MACD is becoming smaller. Yeah. One hill, two hill, three hill. Most likely when the three hill is reached, you can actually exit the position because the trend is going to change again. Yeah. Three hill, remember? One big hill, two big hill, the ballet hill, the upside down hill. One big hill, two big hill, three big hill. When you see the three big hill, sorry, the three small hill, the smallest hill appearing, exit the position. Exit the position. Smallest hill appearing, exit the position. Yeah. This one was smallest also. Yeah. You see this getting smaller, right? mRNA again, it gets smaller. Yeah. Three hills also. One hill, two hill, three hill. Yeah. Exit the position because it will start. You see here, it comes here until here it starts to actually turn already. Yeah. So as I said, mRNA is a bit volatile. Yeah, it is a bit volatile. The change can be very fast and very big here. Yeah. But for this, I think Pfizer is actually the most subtle one. The most subtle one. Yeah. The safest one is what is that? This Pfizer. Yeah. What is that? J and J, all this delta. Yeah. Delta. Again, this sideway. Here, not much. One big hill only. One big hill. Change. Either that three big hill is one to exit, or when it changed green. When it changed green also is a sign of you to exit. Yeah. So I think a lot of points here. I mean, so too many. I think for some already overload. Already overload. Yeah. So this I think this would make you guys a bit careful, and of course try to actually benefit on the post calmer trade lah. Calmer trade, more certain trade lah. Yeah. Don't FOMO in and just don't chase it lah. Okay, so that's all I want to share today. And I hope you guys have actually learned something here. And if you guys like this so-called talk today and the contents which I actually put up, yeah, please by all means share it with your friends. And of course, that will also help them so that they don't FOMO in and then just get hit when the lion come and fight with each other. Yeah. Okay, all right. So that's all from me. I will actually catch you guys next week on Traders Talk. I will find more topics for you. Yeah. So okay, great. Thanks Sharon for joining us. Wyman, Richard, thank you, and of course, I will see you again next week on Traders Talk. Until then, don't forget to train, trade, and thrive. Yeah. So I'll see you. Bye bye.